Hey everyone, welcome to our first Q&A session. We'll be going through the community and answering some tax questions that some of you have been asking. We've got topics like taxation for people coming from the US, we've got crypto tax, we've got relocating companies to tax havens like Gibraltar, buying a second home or multiple properties, moving big money to Spain to buy a house, and finally how everyone should be reporting their income when they come to Spain. All right, now enough of me talking and let's get to it. First of all, quick brief intro. Hey everybody, thanks for making it to our Q&A session. We have Julian here again. You may remember him from our previous episode on public investing and the Beckham Law and the 183-day rule. Today we're going to go through some questions from the community. So the first one, first of all, hey Julian, I hope you're happy to be back as well.
Thank you.
The first question from Fancundo Jait. The question is, I work for an American company and I have my money deposited in an American bank. What would be the best thing to do to not pay taxes or pay less? I live in Barcelona. Not much information here, but I mean, Julian, feel free to give your take.
Yeah, exactly. So if you live in Barcelona, this means you live in Spain. Here, there's the world income principle applying, which means that you need to tax everything, all right, as a general rule. Of course, if you are having your money in an American bank account, which is your case, and if you do not take the money out of this place, then you could try to trick the Spanish tax agency. Yeah, there are many clients who do this. They say, okay, I'm keeping just the money outside of Spain, more specifically in a country that does not belong to the European Union. So it makes it everything much more difficult for the Spanish tax agency to see if you have earned money or not. But if we just take the law says that you should tax this money here in Spain. All right. So it doesn't matter. You should tax it here in Spain. In case that you have paid something outside, something abroad in the US, you will be able to deduct the paid taxes in the US here in Spain. But as a general rule, this would apply. But of course, now it depends on how many risks you want to take. Yeah, some clients decides to go the risky way, and some others wants to just sleep well and say, okay, I'm going to declare it.
Is there any way in this scenario that they could be applying for the Beckham Law, working for an American company then?
Yeah, definitely. If you work remote since last year, the 1st of January 2023, you can apply for the Lex Beckham. There's no problem. Now, here's the thing. If you move to Spain and you want to apply the Lex Beckham, then you need to have the reason behind. In this case, if you are going to work from home, let's say home office, then it's no problem. But what you cannot do is if you are already living in Spain for the last year or for the last 2 years, then say, okay, now I want to apply the Lex Beckham. So the Lex Beckham must be applied just as at the beginning. All right, this is an important issue. Of course, there are some clients who are living already in Spain for, let's say, since 2021, for example. So it would be 3 years, and then they try to apply for the Lex Beckham. So after 3 years, and they just say that they did not live in Spain, so that they are new here in Spain.
Yeah.
In this case, it would be able. All right. So main issue is to make sure that you apply for the Lex Beckham just in the first 6 7 months after coming here in Spain, and more specifically, you have 6 months from that time where you register in the Spanish Social Security. All right. That's important to keep
Okay.
that.
Fantastic. Next question from Ro Re. Hi everyone, I'd love to know how is the situation with crypto and Spanish taxation, the MiCA law and updates. If anyone is informed or has any clues, do I have to declare my crypto as a Spanish citizen? When and how? Any suggestions? Thanks. So, what is the MiCA law?
Well, Mika law, I didn't heard that actually, the Mika law in the Spanish taxation. In the Spanish taxation, usually we're talking always about the Lex Beckham regime, or maybe in some cases we could be talking about being taxed as a non-resident, something like that. But regarding the MiCA law, which is it is actually a crypto regulation, but it is not like a real tax regulation. Yeah, that's the thing. All right. If we are talking just about taxes, yeah, cryptos are going to be considered exactly the same as if you would buy a property. All right.
Mm-hmm.
They just took into consideration the acquisition value, so how much money you paid for that cryptocurrency. It doesn't matter if it's Bitcoin, Ethereum, or whatever. And then they are going to see for how much money you sold this Bitcoin or this Ethereum or whatever currency, cryptocurrency it is. The profit that you make out of it will be taxed between 19 and 28% here in Spain. All right.
Uh,
So that's the thing. So from just a tax perspective, it is going to be considered as any other asset that you could acquire. And for cryptocurrencies, very recently there's a new obligation. There's the Modelo 721, which is basically the same as the 720, yeah, but it is just a specialist for cryptocurrencies, all right,
mhm.
where you need to declare which cryptocurrencies you have worldwide. All right. Of course,
Okay.
with cryptocurrencies, it is always like a little bit, let's say, like a dark world where usually nobody knows where to whom the cryptocurrencies belong and that stuff. So you can play a lot with that. You have a lot of game to play there. But of course, if you want to just do as the law says, you need to declare it in your income tax and in the Modelo 721.
Okay, got it. And so, okay, that's basically how I declare it. And when it comes to the Mika law, like you said, it's not a real regulation. Like, what do we know about it?
Yeah,
Have you
the,
found out?
the, the MiCA law is like a regulation for the cryptocurrency markets. This is not like my expertise field, so I could not tell you like many things about that,
Yeah.
but it is just a law that regulates the cryptocurrencies market. That's
Okay.
the
So
only
not
thing that.
relevant for us for taxes.
For tax purposes, not. For tax purposes,
Okay.
you just need to declare the difference between acquisition and transmission, and that's it.
Okay, cool. Next question. Damien Couves. I hope I pronounced that correctly. French living in the south of Spain. I'm looking at the option to relocate my company. Very simple structure in Gibraltar, but remaining a non resident. Does anyone know the easiest way to proceed? Brackets, I'm a newbie entrepreneur.
Okay, so here are two things that we need to take into consideration. One thing is the private issue, and the other thing is the company issues. All right. So the company is registered in Gibraltar. We need to know that Gibraltar, which is in the south of Spain, it is a tax haven. All right, at least considered from the Spanish tax agency as a tax haven. All right, we really need to be very careful with these type of territories. All right,
Mm-hmm.
first thing that I want to say is that the definition of tax haven is it refers to these territories that are not cooperative territories that do not cooperate with the Spanish tax agency. This means that there could be a country like, for example, United Arab Emirates or, for example, Andorra, where the tax rates are very low compared to other countries, but they are not considered as tax havens. All right,
Mm-hmm.
so that's a very important thing. Now, here regarding Gibraltar and all the tax havens issue, the main disadvantage is that there are some extra taxation for companies that are located in tax haven countries. All right. For example, if this company would acquire a property in Spain and they would like to sell the property, there's an additional tax rate if the company is registered in a tax haven country. So that's one thing that we need to take into consideration. Another thing, for example, is that if this company located in a tax haven receives some money, some interest from a Spanish company, then it would not be tax exempt in Spain. All right. So, what I want to mention about tax havens is that, of course, there are some benefits, yeah, because nobody knows almost nothing what happens inside there. But
Mm-hmm.
if you want to operate with your company in Gibraltar, you need to take these kind of issues into consideration. Then this is one thing regarding the company in Gibraltar. Regarding the person, yeah, the person is a tax resident in Spain, so this person will have the same tax obligations as any other person in Spain. It doesn't matter if this person has a company in Gibraltar or if this person does not have this company. You can keep this company in Gibraltar. That's no problem. Yeah, you can have a company wherever you want to. Yeah, so you are not obliged to relocate this company from Gibraltar to Spain. All right. The easiest way to do it, I would just recommend to create a new company here in Spain, just a limited Spanish company, which is pretty easy to create just in a few days. And that would be like the easiest way to manage. Just to let the Gibraltar company in Gibraltar and have your Spanish company in Spain in order to do your Spanish businesses.
Okay, got it. All right, now for Michelle Maria. Hi, I want to buy a second house in Spain, but preferably not in my name. What are the options as last year the government stopped the inactive companies such as association trusts? Do you have any suggestions for this?
Well, actually, I know what she means about that the company just blocked the inactive companies. It is not exactly like that. Let me explain it a little bit clearer. The Spanish government does not want to have companies that do not file the corporate tax declaration or companies that do not file the accounting. All right. And this happened a lot with many companies that were almost inactive and nobody was taking care about that. And then you could see that there was no corporate tax declaration since 2015 and no accounting file since 2012 or whatever. So that's why the government said, okay, if you do not file your corporate tax or if you do not file your accounting, then we are going to block your tax number until you file it again. Once you file it again, we're going to undo your tax number. So actually, the only thing that you need to do in order to not get blocked is just to file your corporate tax. Even though if the result is zero, you just put a zero there and you just file it. And the same with the
Hmm.
accounting. If there was no activity, you just file your accounting just with a zero, and that's it. And this way, you can still have your tax number active. All right. So this is one thing just to make sure about it. Then, regarding buying a second property, here we need to take into consideration one thing. If you buy your second property as a private person, then you can just use it like normal. Yeah. Here in Spain, there is a special tax for people who have more than one property that is used by for themselves, that is not rented, and that where there's no economical activity developed in this property. This is the so-called self-use tax. It is commonly called like that. It is not much value. I mean, the tax that you need to pay is not much. Actually, you just take the catastrophe value, which is a value that is maybe one third of the real market value. Usually, is around one third. You just multiply this value in 2%, for example,
Hmm.
more or less. Let's suppose we have a property that has a market value of 300,000 euros. The catastrophe value would be around 100,000 euros. You multiply this 100,000 euros by 2%, for example, more or less, between 1.1 and 2%. Let's make it 2% to make it easy.
Yeah.
2% multiplied by 100,000 euros, 2,000 euros. So they say that you have like a fictive income of 2,000 euros. And then you need to pay your taxes, usually around 30%. So 30% of this 2,000 euros, which would mean 600 euros a year just for having this second house. All right. This is what would happen if you would buy it as a private person. All right. If you would buy it through a company, it doesn't matter if it's an association or just a regular company or whatever. Here, you really need to pay a lot of attention. Why? Because we are considering now an operation between two parties that are vinculated, that have a relationship. Yeah. Why? Because you are the owner of your own company and you are the one who's using the property that belongs to the company. So, in
Hmm.
these cases, the Spanish tax legislation establishes that you need to pay a rent, a regular rent. So a rent that has a value that would be paid by a third party, just in normal market conditions. So here we need to pay attention, because if the property is 300,000 euros, for example, at a market value, this means that this property would probably have a monthly rent value of
Hmm.
maybe 1,200 euros or something like that. So actually, from a tax perspective, you should pay to your company every month 1,200 euros for the rental of this house. All right. And the company should declare this 1,200 euros as an income and pay taxes on that. Okay. So in the end, the taxes that you would need to pay as a company are much higher than the self-use tax that you would need to pay as a private person. All right. So
Yeah.
here we need to always take into consideration before buying a property what's the best option.
Why do so many people ask about buying a house through a company? Why is it such a common thing that people try to go for?
Yeah,
What?
it is very common because, especially in the past, people did it because then when you want to sell the house, you do not sell the house, you just sell the shares of the company. All right. And they try to avoid the transfer tax specifically. Yeah,
Mm.
transfer tax here in Spain, it is at a pretty high rate between 7 and 13%, depending on the region the property is located.
Yeah.
But imagine, let's say 10. Of course, if the property is 500,000 euros, then you need to
Yeah.
pay 50,000 euros on top, which is a lot of money actually.
Yeah.
But if you sell the shares, then due to the fact that the shares are tax exempt from the transmission tax or from the transfer tax, then you can save this 50,000 euros. So the new
Okay.
owner could save this 50,000 euros. So that's why usually many people in the past used to do this type of constructions. And the bad thing is that a few years ago, the Spanish legislation had a modification. So what they say now is that if your real intention is to buy the property instead of buying a business, yeah,
Mm-hmm.
then you still need to pay the transfer tax. All right. So right nowadays, it doesn't make any difference if you buy it through with a company, for example, or if you buy it by yourself. The taxation in your income tax from the earnings or from the benefit that you get out of the sale of the house are going to be taxed the same way. And if the new buyer, he's going to pay anyway the transfer tax.
Yeah. Okay. Got it. All right. Next question from Brad Pitt. Hey everyone, I'm living in Spain now for the last 2 years and I want to start investing into real estate. I wanted to ask what are the best ways to save on taxes when it comes to real estate deals? So I guess other than what you mentioned for the first house that you buy, what also the best ways to save on real
Because
estate?
what did he say? Is he living in Spain or outside of Spain?
He's living in Spain now for the last 2 years and he wants to start investing. So I assume he lives full time in Spain.
Yeah, I mean, if you want to start investing in real estate, there's only one way that I could tell you that maybe a company is interesting. Why? Because in the corporate tax legislation, if you have 8 properties or more, and if you rent them for a long term, then you just pay 15% corporate tax, 15%. So that could maybe a good idea if your plans are to have many properties, yeah,
Mm-hmm.
more than 8, for example, because you would just pay 15%. So that's actually pretty good. And then you just take out the money that you need, you just pay for dividends tax, and that's it. But that could be a good option. If not, if you decide to do the same as a private person, you get a discount of 50%, so half of it. Let's suppose you earn 10,000 euros from a property that you rent, you earn 10,000 euros in a year, so you would just need to tax 50% of that, 5,000 euros. The problem about the income tax, the personal income tax, is that it is a progressive tax, which
Mm-hmm.
means that if you have a lot of properties, let's suppose that you have earnings for 200,000 euros, even though 50% is off, you still need to pay taxes on 100,000 euros, which you would be landing by maybe 40%. And
Yeah.
on the other side, in the company, you will always stay by 15%. Yeah. So
Yeah.
if you have in mind to buy a lot of properties, then I would recommend you to use a company. If not, if you just have in mind to, let's say, let's buy 4 or 5 properties, then I would recommend you to buy it as a private person.
Okay, got it. All right, another question. Hi, I'm 34 years old, male, US citizen. I'm considering to moving to Spain on the new digital nomad visa. I'm a full-time employee of a company and meet all the requirements as I've been completely remote for 3 years now. The company is okay with the move. I spoke to a lawyer yesterday and she said there's a flat 24% tax on global income for this visa. I am already in a tax bracket in the US that with state and federal income tax is around 28%. I'll prefer to keep my paychecks coming to my US bank account because I'm still paying off my student loans. That's part of why this program was attractive to me because with the cost of living in Spain, I could finally pay down that debt. However, if my tax liability effectively doubles with this move, I probably wouldn't make it. I thought Spain and the US have a reciprocal agreement to avoid double tax. Can anyone help me understand what my tax obligations would be if I move to Spain and continue to get paid to my US bank account?
Yeah, definitely. He refers to the Lex Beckham, of course, 24% flat rate. That's Lex Beckham regime. In this case, I would recommend him to apply actually the Lex Beckham regime. Why? Well, because of the 24%, of course, and also because I think that coming from the US, he must have, let's say, a high salary, because salaries in the US are much higher than in Spain, for example.
Mhm.
So in this case, the tax rate here in Spain is pretty good. And yeah, definitely, I mean, there's this double tax agreement where you everything that you pay abroad, it is going to be deduced. So there's the thing. So in this case, I see it pretty clear to apply the Lex Beckham regime, just to move here, just to apply it here in Spain. If the company agrees, usually many companies, what I have seen per my experience, is that they do not really like to send or to have employees in Spain. Why? Because then the company needs also to register here in Spain, to have a tax number, to pay social security for this employee and that stuff. So many companies says, hey, we don't want to have any kind of trouble, so we do not accept it. But in this case, if the company agrees, then it could be made. The company just needs to have a tax number, which is pretty easy to get, and that would be actually everything. And the money, this is a question that often comes in conversation, where people ask, what happens if I leave the money in an account, in a bank account in China, in Brazil, in US, or whatever? Yeah, this is a typical question. From a tax perspective, it makes no difference actually. All right, so that's from a tax perspective, usually it doesn't make no difference. But as I said, it is always this strategy of trying to hide some things, yeah, to trying to say, okay, I'm letting the money in a US bank account or in a Canadian bank account, and nobody in Spain will know. All right. So this is a strategy, but as I said, this is more a strategy outside of the law than a strategy inside of the law. So applying Lex Beckham is a strategy inside of the law, not declaring your incomes and letting the money in a bank account in Australia is just staying outside of the law. But of course, many people do that because there's not an effective exchange of information between countries that are outside of the European Union and Spain.
Yeah.
So this is a strategy that many clients do.
Quick question. Inside the European Union, are the countries cooperating a lot then?
Well, actually, inside of the European Union, the cooperation is much bigger, it's much higher, yeah. But anyway, regarding countries that are outside of the European Union, there is still a cooperation. This means
Mm.
if it would be, for example, in a tax inspection, the Spanish tax inspector would ask the American tax authorities for some information regarding the person who is being inspectionated. Yeah, and the American tax authorities would facilitate this information to Spain because there's a double treaty agreement and also an exchange of information. But of course, it's everything much slower and much more complicated than if it's inside of the European Union. If it's inside of the European Union, the Spanish tax inspector can have the information in 2 days, in 3 days. So
Yeah.
it's super quick, and all the communications are much faster and they work much better.
Okay, got it. Next question. Carolina Compañía, I think. What is the best strategy to bring a big amount of money from my home country to Spain? The goal is to avoid paying high taxes, of course. The money would be used to buy an apartment in Spain. Thank you. I feel like we talked about this previously in the earlier episode. I guess you sir would recommend, going for the Beckham law to bring in the outside money.
Yeah, this could be an option, of course. Now, quick question: is she living already in Spain, or is not living in
We
Spain
we don't
already?
know. So I guess let's think about both scenarios. Maybe let's assume she's living in her home country right now, and what would it be different if she was living in Spain now? So
Okay, if she comes from abroad, from another country, then she can just come to Spain and just invest the money, and she does not need to pay any income tax here in Spain because the money was generated during a period of time that she was living outside of Spain. So the
Mhm.
Spanish tax agency has no right to tax this money that was generated in previous periods.
Yeah.
So this is one thing. She would just come here, she would buy property, she would pay the transfer tax or the value added tax, one of these two taxes for the purchase of the property, and that would be it. Yeah.
Mhm.
If she's already living here in Spain, and she brings the money from outside. If it's a huge amount of money, of course, the attention from the Spanish tax agency will be higher. Yeah, if suddenly there are 800,000 euros coming in, yeah, and she was already tax resident here, then
Hmm.
the chances are very pretty high, I would say, that she gets some type of requirement where the Spanish tax agency asks, okay, hold on for a second, where did you get this money out from if you were already living here and in Spain and you did not declare anything of that?
Yeah.
So it would actually make a huge difference if she's living outside and she comes to Spain or if she's already living in Spain.
Okay. If she wasn't living in Spain beforehand, does she get any tax break for moving that money into Spain for the stuff that she buys?
No, the moving the money from one country to the other does not make any difference from a tax
Okay.
perspective. All right, so you can move the money as you want to. If we are
Okay.
talking about the income tax, it's always about generating this money. So the
Okay.
question would be, where did you generate this money, and when did you generate this money? Yeah,
Okay.
this would be like the main question. If the money was generated in the last 4 years, which is the period of time that the Spanish tax agency can prove everything, then the Spanish tax agency would very likely ask
Hmm.
you, why did you not declare this money? If the money
Yes.
was generated, let's say 8 or 10 years ago, then there's nothing to do for the Spanish tax agency and you are safe.
Okay, got it. Next question from Deborah Lee. Hello, I've just started a consultancy for an American company. I've got a UK passport and I'm a Spanish resident. What do you recommend I do regarding tax? So I guess there could be a couple pathways here, or open a company in Spain, or just start as an autonomo in Spain, or I guess maybe create a US LLC and then build to there. What are sort of the different things that she should be looking at or considering?
Yeah, I mean, as you said, there are so like different ways to manage this. You can start as an autonomo. As an autonomo, for the first 2 years, you get 20% off in taxes, which is pretty good actually. If you start through a company, the company will be taxed with 23% in the corporate tax. And here we need to take into consideration, if you are going to start a business, specifically, for example, consultancy business, and you do not have any people and you neither have any
Employees.
materials or
Oh,
any
okay.
place to be, all right, then in these cases you are obliged to get all of the money out of the company, at least for tax purposes, and taxes in your income tax declaration.
Mhm.
Why? Because in the past there were many people who were earning a lot of money, let's say 400,000 euros a year, and they were, let's say, a lawyer or an engineer or a consultant or something like that, and they just created a company. The company was taxed with 23%, and they just took out maybe 70,000 euros to live, and they just let all the money in the company because it was only taxed with 23%. They did not need this money.
Hmm.
But then the Spanish tax agency said, hey, hold on for a second. This company is not bringing any value added. So you are the one who's offering the whole service. You don't
Yeah.
have many people working there. You don't even have an office. You're working from home, maybe. So actually, the company is not bringing anything. Yeah.
Yeah.
So you are like misusing the company just to pay less taxes. So in the end, it doesn't matter if you create a company or if you work as an autonomo. If you do not have any employees and the company does not have anything, then the end taxation is always the same, which is in your personal income tax.
Yeah.
It is always very typical, the LLC. All right, LLC, that is super common, specifically for people who are doing, for example, a digital business. Yeah, like they are operating through Amazon, Shopify, Alibaba, or whatever.
Hmm.
They create an LLC in the United States, usually in New Mexico, for example. And why? Because the costs of creating an LLC are very, very low. Yeah, it is very quick. It is very low. It gives you a certain stability, and you are secure because, of course, it is an American company. And then these companies, they are called the pass-through companies. Yeah, pass-through, which means that all the benefits and costs generated by this company, it is not going to be taxed in the company field, but this is going to go pass through the company to the owner, and it is going to be taxed directly in the income tax of the owner. So there's actually nothing to be paid in taxes in the US, and everything should be taxed in the residency country. So here there are many people playing also with this type of constructions with LLC, because what they do is just they earn 100,000 euros, and they try to bring the benefits to zero
Mm.
by putting a lot of costs. The problem is that many of these costs, they are not related to the activity that they are doing. Yeah.
Yeah.
So actually, if this would be proved by the tax agency would say, "Hey, you earned 100,000 euros. You are telling me that you had 100,000 euros in expenses." But from this 100,000 euros expenses, only 60,000 euros are related to your activity, and 40,000 euros is just money that you just put it in as a cost, but are not
Yeah.
related to your activity. So you need to tax this 40,000 euros. But again, it's always the same situation, yeah. When you're using companies from abroad, that people try really to hide a little bit from the Spanish tax.
Cool. We're
Okay,
back again.
sorry,
All right.
I didn't know what happened.
Yeah, suddenly I think the internet just disconnected. But anyways, as you were saying, so ULS LLC pass through entity, people try to avoid it and put fake costs there. So
Yeah, that's basically the thing. Yeah, there are many platforms actually they sell this type of construction. They
hmm
just tell you through YouTube, Instagram, or whatever. They tell you, hey, you want to save taxes? Just create an LLC, and you can just do everything through your LLC. And as I said, from my perspective, if the tax agency would prove this issue,
mm,
of course they would say no. There's a part of this cost that are not deductible,
yeah,
so you need to pay taxes. You had a profit, yeah. You try to bring the profit to zero by including personal costs,
yeah,
but this is not accepted. But well, as I said, due to the fact that this is like America, well, the United States is a country outside of the European Union. For the Spanish tax agency, is much more complicated to follow all these issues. You need to always put them in the shoes of the Spanish tax inspector. What's easier to prove someone who's in Spain, who has all the businesses in Spain and all the relationships in Spain, or to prove someone who has a company, an LLC in the United States, and a company in Brazil, and the other thing in Thailand or whatever? Yeah.
mm,
So the Spanish tax authorities or tax inspectors, they just really go to the easiest things.
okay. So I guess in short, what do you think would be the best or the easiest for Deborah in this case? Knowing like the limited
She was,
information that you do.
she was in consultancy. Was it consultancy or was it?
Yeah, consultancy for an American company. She's a Spanish resident, UK passport. If you were to give maybe a gut feeling, what's probably the best path for her, or maybe one the
Um,
best two
is,
paths?
is she working as a self? I mean, she said her idea is to work as a self-employed or to work then as an employed,
It's-
or it doesn't
si-
matter.
like says started consultancy. So if I were to guess, I would maybe say a self-employed consultant working for an American company.
Okay, so as a self-employed consultant, I would tell you just to take profit of this 20% tax reduction as an autonomo. And
Yeah.
also, if you register here in Spain for the first year, and depending how, also for the second year, you just need to pay 80 euros, just 80 euros a month for your social security payment. So
Okay.
that's pretty good for the first years, and also
Okay.
this 20% tax off.
All right.
That's what I would recommend.
Okay. Sounds good. This is a little bit of an extension of the previous case that we mentioned before with a U.S. citizen considering to move to Spain on the digital nomad visa. We had someone comment on his post saying, I'm an American working for a U.S. company and on a digital nomad visa here in Spain. He says you can keep your American bank account. All my salary is directly deposited there. I opened a Wise account to reduce my exchange fees. It's great, and you'll not pay double tax there as a treaty. Also, my understanding is 24% tax for for digital nomad visa, but I haven't filed yet. Is this correct? Let's say.
Yeah, yeah.
Yeah.
Actually, it's correct. You just pay 24%, and you can just manage your bank accounts as you want to. Yeah, you can have a bank account in Wise or N26, Revolut, whatever. I
All
mean,
right.
you can manage as you want to.
Sounds good. Okay. Very last question from Shea Burger. Hi, I'm an Israeli citizen living in Spain with my Portuguese wife and Spanish minor girls. I have a residency permit for 5 years as a father of Spanish minors. I'm a freelancer working only for an Israeli company. All my finances are located in Israel and I pay my taxes there. Having no fiscal entity here in Spain and with an existing double tax prevention agreement between Israel and Spain, how, brackets, and should I report about my income to the Agencia Tributaria and the Social Seguridad? So I replied to him briefly of like maybe three methods of first filing in Israel, then getting the amount that they paid there, and then showing that to the Spanish government, and then paying the remainder tax in Spain since he is now a tax resident in Spain. And then the option of going autonomo in Spain and getting the 20% reduction with the social security, like we mentioned before, and then the third option of maybe the Beckham law, since if he just moved fresh into Spain. And he apparently he knows about these options, and he said, "Thank you so much for the elaborate answer. I'm fully aware of all these options, and I've had a number of consultations with historians and international tax experts, including 2 visits to Agencia Tributaria. I still remain with a technical question of having no fiscal entity here in Spain. What is the actual process of reporting my income to Agencia Tributaria and Social Seguridad? I don't want to open a company here for the Beckham law, and I don't want to register here as an autonomo." So I guess he's going for the first path of just reporting his income normally. How does he do it technically?
Yeah, yeah. I mean, everybody here in Spain needs to file the personal income tax declaration. It is an annually declaration, unless you are working for a Spanish company as an employee and your salary is below 22,000 euros a year. All right. But besides that, and maybe one another isolated case, everybody needs to file this tax declaration, the income tax declaration once a year if you have some earnings. So if he's receiving some money from Israel, maybe through dividends, maybe through interests, maybe capital gains, maybe, I don't know, he's working or he's
Yeah, he's freelancing here in
exactly
Spain
a
for Israeli
freelancer
company.
issuing invoices to Israeli companies, whatever. If he's living here in Spain and he is actually a tax resident here in Spain, he needs to file the Spanish tax declaration. Of course, according to the double tax treaty agreement between Spain and Israel, the money that he paid in Israel, he will be able to deduce it here in Spain. So there
Mm-hmm.
was not never going to be a double taxation,
Mm-hmm.
but he needs to file the not only the personal income tax declaration, but also the wealth tax declaration if the wealth is over a certain threshold. It depends on the
Mm-hmm.
region where you're living, and also the model of 720. So actually, everybody here in Spain has these three obligations, and maybe the model 720 and the wealth tax. It depends, of course, if you have goods abroad and if you have a huge wealth. But in the income tax, almost everybody needs to file it because everybody has some incomes. Maybe, I don't
Yeah.
know, from rentals or something. But almost everybody has incomes. And as I said, unless you are just an employee who earns maybe 20,000 euros a year, and that's the only thing that you have, that's the only case where you would actually be exempt to make the declaration. Of course, you are not exempt of paying taxes because there was already the withholding tax. The taxpayer took a little bit of your money,
Mm-hmm.
and this went to the Spanish tax agency as a withholding tax. Yeah, so it is not that you are tax exempt; it is just that you are exempt of filing the
Yeah.
personal tax declaration.
Okay, and when it comes like technically here, like how do I actually go with the reporting of my personal income tax? Do
Yeah,
I
it
have
is
to go to a
called.
tax advisor to file my personal tax returns for me,
Mhm.
or do I have to just Google specifically a
Mhm.
particular form that I download and I fill out, or what?
Exactly. So actually, everybody here in Spain can file their own tax declaration.
Mm-hmm.
That's like this. So it is a free service from the Spanish tax agency. It is called the Modelo 100. So
Mm-hmm.
Model 100 or Tax Formula 100. The key thing usually is that because there are so many things to declare there, or there are so many options, if you are not used to manage in this taxation world, it means you could feel a little bit overwhelmed. Yeah,
Mm-hmm.
so that's why, unless you have just one income or maybe two incomes, which are super easy, Unless this is your case, I would just recommend to contact a tax advisor just to pay a little bit, and then he will take care
Mm-hmm.
of everything. He's going to ask you what have you earned, which expenses do you have. He will also give you an advice on how to optimize maybe your situation, and
Yeah.
it is going to be much easier because if you try to do it by your own, the problem is that you're going to spend like 2 3 hours 4 hours, and for sure there's going to be something wrong. You're going to
Yeah.
make a mistake because you thought that this was for this type of incomes, and actually it was for the other type of incomes. So you are going to spend a lot of time, and then
Yeah.
something is going to be wrong. So that's why I say, okay, just pay a little bit, and that's it.
Okay, sounds good. I think yeah, that's the last question we've got here. And yeah, thank you so much, Julian. The community will love this. And yeah,
Thank
cool.
you.
Hope to see you soon. Probably the next session we'll do is on real estate, your favorite topic.
Yeah,
So yeah,
definitely.
all right.
So,
Enjoy.
thank you.
Ciao,
Have a
ciao.
nice day. Bye.
Hey everyone, thanks for watching the Q&A. If you thought this was helpful, make sure to like the post, and please, if you're watching this on YouTube, click the subscribe button to stay tuned for more helpful tax content for you and your friends. If you haven't joined the community yet, I'll leave the link in the description for you. All right, bye-bye now.